My name is Tony Sio, so I'm Head of Regulatory Strategy Innovation for Nasdaq's FinTech division. What that is kind of twofold. One is I look after the Nasdaq market surveillance product, and the second one is that I look at the kind of evolving nature of regulation technology, and I help our customers navigate that. I also write Nasdaq's Regulatory Roundup newsletter, and that's what I'll be talking to you more about today. There's kind of like quite a few drivers for launching the Regulatory Roundup. The first is we have kind of customers all around the world, and we really kind of keep tabs on all the regulatory changes that are happening kind of across the globe for financial markets. And we kind of collate and we kind of look at what's going to impact us from a product perspective, from a company perspective, and kind of from a kind of investments perspective. So we thought we would take this and kind of collate it together and put it out to our clients. We felt that our clients kind of like they kind of are impacted in the same way by all these regulatory changes, and really kind of like the pace of regulatory change has really kind of moved very quickly in the past few years, both from a kind of new types of regulation, but also in terms of from a technology perspective. When we kind of like were collating, putting out the Regulatory Roundup, we kind of like thought it would be kind of more useful to kind of provide a deeper dive analysis as well, rather than just a kind of collation of different types of news or events that are happening out there. Me personally, I've worked kind of in different jurisdictions around the world, kind of deploying and setting up surveillance and RegTech solutions in markets around the world. And I've kind of realized a few things. So firstly, that there's kind of like a real commonality between the challenges that different markets are facing across different jurisdictions. And then secondly, that even though you might be facing the same challenges, you'd be facing them in different ways and at different times. So I think a good example of this is how in APAC right now, they're kind of like really thinking very hard about how to regulate HFTs, right? And this is something from a US and EU perspective, there's already kind of a large body of history around the regulation and around the different behaviors kind of overseeing and monitoring kind of HFT actors. One interesting case is around shadow trading. So this is kind of like a very ominous sounding type of behavior. Normal inside trading is when someone trades upon material, non-private information. And in normal inside trading, I will normally kind of buy that stock, that information relating to. Say a kind of like a biotech company is about to be bought out, and they buy that biotech company before they get bought out. In shadow trading, the inside trading isn't directly in that stock, it's in the economically related instruments and securities. So in the shadow trading case, rather than buying the stock that's about to be bought, they buy other stocks that might be impacted by that material non-private information, but not necessarily that stock. The SEC, just 2 years later in 2022, they started a case, an actual shadow trading case against a pharmaceutical executive, which kind of follows this pattern of behavior. Right, and it's kind of quite interesting, kind of the SEC's approach on this, and we covered it in one of the Reg Roundup deep dives because it has kind of real kind of potential implications in terms of kind of how people and kind of firms kind of perceive insider trading. And then kind of more recently, just in April 2024, that case closed, and the pharmaceutical executive was kind of prosecuted for insider trading in that shadow trading case. So we're kind of really seeing the example of kind of things coming from essentially like an academic theory to an SEC case to kind of like a prosecution of a case. And now I think there's kind of practical implications to compliance and surveillance people out there in terms of kind of how do we kind of now kind of include this shadow trading behavior in our compliance controls. Another kind of interesting case that we kind of covered is around churning. So churning is a kind of fairly kind of procedural activity. So churning is when a kind of like a broker or an asset manager excessively trades a fund for the purpose of generating kind of fees in that fund, which they collect themselves. In this case, the victim was like a 13-year-old girl, and her father had died in part of a active military duty, and she had received kind of compensation from the government to kind of help support her. Someone in kind of her family had put some of that support into a fund, right, which then was churned. I believe they had put about $150,000, almost $200,000 in that fund, of which more than half that fund was churned in terms of fees. There have been some active developments in this case. So when I covered it initially, we were talking about the fraud kind of like being prosecuted. and the person that committed that fraud was prosecuted for fraud, and they're facing up to about 20 years in jail right now. And it really kind of shows that even these kind of like very kind of like technical types of fraud, there's actual kind of people who are kind of having their kind of livelihoods, their kind of futures. They are kind of like humans behind the frauds that are happening. I kind of see a lot of the kind of leading regulators already starting to look and kind of think about AI and how it's going to impact regulation. Gensler's talked about it quite a bit, right? He's even coined his own kind of phrase, AI washing. AI washing is when firms are kind of touting kind of AI capabilities that don't exist, right? Similar kind of comes from the word greenwashing. And then Gensler also talked a lot about kind of potential risk around kind of herding, where there's the risk of kind of like a coalescence of AI models, kind of creating kind of systemic kind of herding style risk in the marketplaces themselves. Other regulators have talked also kind of quite extensively about the benefits of AI as well in kind of actual fighting financial crime itself. FINMA, which is the Swiss regulator, did a kind of overview, they covered it fairly well. So they talked about kind of like 4 angles, which I think a lot of regulators are probably going to look about it in those terms. So the first was around governance and responsibility. And they talked a lot about how you kind of use AI, but kind of AI for decision making, particularly kind of certain kind of very kind of critical decisions, needed to be kind of thought about very carefully, and there still needed to be kind of like an end person around kind of responsibility. They talked about reliability, right, and robustness, and it was kind of really in an interesting way when I talk about reliability and robustness. I mean, software is not expected to be perfect. I mean, bugs can and they do exist and happen, but they really kind of talked about what they call critical questioning, right, and being able to kind of question the data and the models themselves. And it kind of rolls into kind of the third thing which I talked about, which is around transparency, right? And transparency kind of really goes into explainability. And I think regulators are kind of like really saying, okay, we're kind of looking at these kind of different AI models out there, but explainability is kind of key. Kind of like, why did those AI models kind of make those certain decisions? I don't think saying that it's a black box is a sufficient response to most regulators out there. And then kind of finally, they talked about anti-discrimination. From an AI perspective, there's kind of like this ensuring there's no discrimination actively, so in terms of active discrimination in the tool itself. But you also need to ensure that there's no kind of like discrimination that might be kind of inadvertently slipped in. And this is kind of, I think, a real kind of risk with certain AI products out there, where there might be kind of quite limited training data sets, right? Where because of the nature of the data set that you've trained the AI on, which might be kind of limited in size and scope, right? There might be kind of discriminatory policies that you've trained against the AI. I think a lot of regulators kind of think about it in terms of these kind of 4 kind of ways. FINRA talked about the kind of like the real kind of breadth of the potential impact. So they identified 11 areas for financial services firms to look at that may be impacted by AI. And these kind of really broad swathe of potential areas. It kind of ranges from kind of anti-AML to model governance to Reg BI to surveillance, right? And they kind of talk about it both in terms of it being a potential risk factor, but also in terms of kind of AI being kind of potential kind of use to support that area as well. We're in a period of very fast-paced change happening in financial markets. And that change is driven by social changes, technology changes, and kind of political changes that are happening out there in the world. Social media, AI, these kind of like examples of changes which are kind of like hugely impacting the financial market space. One thing we're trying to do with the newsletter is we're trying to kind of educate different regulators globally, right? What's happening in different jurisdictions. At the same time, from a kind of my role, my perspective, we're kind of experimenting with kind of these new types of technology, like how we're doing kind of reg tech and compliance, like in that new space, social media, AI being 2 examples. And so we kind of work kind of fairly closely with regulators, kind of from an education perspective, right? Educating them in terms of kind of what's possible, kind of the potential kind of risks in these technologies. But also we kind of like receive feedback from regulators themselves, kind of as we kind of like put these new things out. And we're kind of feedback kind of helps us kind of determine kind of like how do we provide these kind of new types of kind of compliance tools in a kind of like in a safe and effective manner, which are kind of supporting kind of the focus areas that the regulators actually have.